Hello and welcome to this CNBC Africa Special. I'm Chris Bishop. Now my guests today are Annabelle Bishop, Chief Economist at Investec Bank, Tim Namo of Global Financial Innovations. Also we have Grathel Matau, the Development Economist and Business Commentator, and Lesiba Mutata, Chief Economist of Investment Solutions. Okay, ladies and gentlemen, well, we're preparing today to listen to what Lesetja Kganyago, the Reserve Bank Governor, has to say about interest rates. And I think the best place to start, I think, we go around the table and find out what your predictions are, starting with you, Lesiba.
You know, with inflation having eased and also the internal demand in the economy so weak, I don't expect him to move on interest rates today.
I'm of the same view as well, with the CPI numbers that came out 2 days ago, and as well as the constrained economy, and also the vulnerability that we're beginning to see, I think, in the lower income brackets. So I don't think there will be any change today.
Okay, Tim, what do you have for us? Any excitement today, you think?
I suppose more from a currency and bond market perspective, I'd probably expect unchanged.
Unchanged.
Just based on, yeah.
And Annabelle?
Sure. Well, I think, over the period since 2014, we've seen quite a strong ratchet up in interest rates, and even though economic growth has been particularly weak. And now Daniel Manili himself recently said the economy is flat on its back. If you look at the GDP growth for the last 2 quarters of last year, 0.2%, essentially stalling. A lot of monthly data coming through in the first quarter showing that we probably went into a contraction in the first quarter. In that environment, I think leaving interest rates unchanged would be the most sensible.
But overall, just before we go to Pretoria live to listen to the Reserve Bank Governor, just talk a little bit more about the background to this, the economy. So I'm going to quote Colin Garo, the economist. He says the risk of recession is now huge as we speak. Do you agree with that?
Yeah, so you look at the quarter-on-quarter employment data, 355,000 people lost their jobs. And in it, when you looked at the sectors that are feeling the most pain, are trade, manufacturing, and also the agricultural sector to a lesser degree. It just shows you that this economy has almost come to a halt in terms of growth. Going forward, also it's lackluster. We're talking about the IMF saying 0.6, the World Bank 0.7, Standard & Poor's 0.6, numbers that are really recessionary-like. So one would not expect an outcome where they will have to tighten policy much more. 200 basis points. If you can think about what they've done, they've really gone ahead of the market. There was expectation they will move in tandem with the US. They've demonstrated a huge amount of independence. They have been spot on their inflation forecast, and they've done the heavy lifting. So I do think that from where we sit now, they just allow the economy to heal with that tightening that has happened so already.
So Grathel, speaking to you as a development economist, and we're talking about inflation coming down, but clearly unemployment's going up. I mean, the most recent figures, 27%. That's more than 1 in 4.
Yeah, exactly. And I mean, that's the highest it's been since 2008, which is a significant concern. And my view is that with the current way of doing things, because it's business as usual or business as unusual, but very slow. So we're actually not going anywhere, but we're actually going nowhere slowly. If I'm putting it correctly. And the problem is that we are not focusing at the areas such as the informal sector. And if you look at Egypt, that's what they've been doing over the past couple of years, over the past 10 years. And so it's not surprising that they're actually the second largest economy on the continent. So until such time as we focus on the township economy, on the rural economy, because we need to bring those people in there and bring them into the mainstream economy. So we need to start working and building the informal economy and slowly bringing it into the mainstream, into the formal sector.
The question I have for you, I mean, foreign investors, the people with the hard currency who look at this country, often they look at the big things. They look at mining, manufacturing, resources. How can you get them as a development economist to look at the grassroots on the ground, entrepreneurs, who, in my view, actually are probably the saviors of this continent?
Yeah. You see, my view is that money is not a problem of South Africa. There is money, but it's just not being invested in the productive areas. I mean, we've got, and I always mention this, we've got, we've got the IDC, you've got the DBSA, there was a 3.5 billion that was announced last year. But when you actually take all of this and fine all of them, and then look at the resources that they have, what is how much of it is actually being invested over a period of time and invested into what? And for me, that is the question. It's not so much about the money, the foreign direct investment. It's more about the money that is sitting in the country, whether it's been accessed and invested in the right areas. That is really my view.
So Tim, no discussion on the South African economy would be complete without talking about the currency. I mean, we're talking, more than 8% loss in the value of the rand this year, something like, was it 25% since the beginning of last year? How heavily is this weighing, you think, on these decisions they're going to have to make in Pretoria today?
Well, it was interesting to see yesterday that after the FOMC release of the minutes, it seems that the bias is more towards an interest rate increase in June. We've seen the US dollar appreciate against quite a few major currencies since then. The rand has done quite well and has gone sideways, which is pretty good considering the environment that we're in with the Treasury and I suppose the discussion around the Minister of Finance. And also just looking sort of at the 3-month the 3-month T-bill yield sort of came in a little bit this morning. So, on that basis, sort of expecting either unchanged or a small increase. But I suppose going forward, there's still sort of that debate in terms of, how much is the US going to increase interest rates, and how much do we then need to increase in terms of keeping up with that. And then also, the rand seems to be, tends to have a very strong correlation to bond flows, for example, flows in and out of the bond market, which I tend to use as a bit of a proxy in terms of shorter term direction when I look at it. So, obviously interest rates sort of need to keep moving in whatever way is required to keep bond investors interested.
I'll talk a bit more about bonds in a minute, but Annabelle, if I ask you, I mean, the April figure for inflation, 6.2%. I mean, do you think the Reserve Bank, this great inflation fighter, is on the right track, you think?
Well, you've had inflation come down from 7% a little bit earlier in the year, but really what the Reserve Bank looks at actually is inflation about 6 to 24 months out. So they're not really looking at where inflation is at the moment. Indeed, the current inflation outcomes are really a legacy of what monetary policy was a year or two ago. I think what the Reserve Bank's really facing in terms of difficulty is the fact that we've got a drought, which is severely elevating food price inflation, and it continues to ratchet up, and that's going to be a difficulty for it in the year ahead. But also a statistical base effect. The rand oil price is very low at the start of last year. And in fact, the reason why inflation is coming off at the moment now in April is because we're coming out of that base effect. So it elevated inflation in the first quarter, we're moving out of the first quarter, and inflation is naturally coming off. The Reserve Bank is seeking, I think, to be a very strong bastion of credibility, certainly fulfilling its mandate as an inflation targeter and to try and keep inflation under control, protect the stability of the currency, given that there's concern perhaps in some other areas of the institutions in South Africa. But I certainly think that, they really have done enough. And I don't think we should have any more interest rate hikes in the foreseeable future, because I'm in the camp that thinks we probably did see GDP contract in the first quarter.
But one thing I want to ask you, all of you here, I mean, the one thing that always defeats me with this, that inflation is still at 6.2% when consumers everywhere, there's jobless people everywhere, consumers everywhere. When you go into any shop in this country, people are almost trying to push things at you before you walk to the door. I mean, they're cutting prices in half, and yet still we've got
it's still elevated.
Inflation, yeah?
It's really mostly cost-push inflation in there. If I was part of the discussion, I'll put out that why should we worry about food price inflation? It's cyclical. Yes, it's driven by the worst drought that we've seen. There has been effort to make sure that inflation expectations are anchored. Yes, at the upper end of the inflation target range, but where we sit now, cyclical food prices, the base effects that are pushing it up now, they will actually draw it down much faster going forward. I'm actually of the view that the SARB will have a conversation about when they'll begin cutting interest rates as opposed to hiking.
I mean, Grathel, I mean, as a development economist, I mean, one thing I can ask you is that this drought, I mean, I think sometimes it's almost been underestimated, the effect that it's had. I mean, look, food prices have probably doubled in the last couple of years. How much more effect do you think it's going to have on the economy here? The terrible drought we're going through still.
Yeah, and I think we really have not seen the impact of this drought. I must say I was surprised when Moody's mentioned that the drought had ended, because in my view, it will take a very long time. I mean, you'd be driving in some of the areas, for example, in the Midlands. I mean, it's very, very dry everywhere. So it is really impacting us now, but mainly it's really impacting people at the bottom, the poor, because when the food prices hit, they are the ones with the biggest basket. That of component of the poor is food and transportation, and unfortunately that is really where the poor gets hit the most.
Well, I can tell you the other day we were doing a story about a cooperative in KwaZulu-Natal doing sugar, and they've been working for years and they've just abandoned the field because there's not enough water and there's nothing they can do about it.
Precisely.
And they're sitting doing informal selling just until get enough money so they can go back and farm one day. It's a terrible situation which I think has really been underestimated. But Tim, back to you. You mentioned briefly bonds there. It's as far as I'm reading it, isn't it? It's quite a good time for bonds despite the difficult situation in the economy. Is that correct?
I tend to look at it more from an offshore investor perspective, and just sort of watch the flows in and out depending on where they see relative yields. So then you'll tend to, for example, when we had the drama in December, bond yields spike, and then as sort of confidence comes back in, they come back down again, and then the buying also is correlated with the currency. So and then also in terms of inflation, I tend to be a little bit more cynical about it and just work off a shopping basket type inflation number, which then also tends to be linked very much to the currency. So I tend to use sort of currency moves more as a proxy in terms of my inflation expectations going forward and that sort of a thing.
Well, I'm told that the Reserve Bank Governor Lesetja Kganyago is on his way to the podium. We'll be crossing over live to Pretoria in a minute. Just last quick one. Do you think there would have been much argument leading up to this decision amongst the deciders of the interest rates?
Well, a couple of days ago, Daniel Manelli still came out very hawkish. And I think there are quite a few quite dovish, so probably a bit of discussion, yes.
Discussion. Okay, well, I'll say we're about to go over. So in any terms, then, you think he's going to have anything interesting to say as well? What are we likely to learn from his speech?
Yeah, so we're interested in how they think about the Standard & Poor's outcome. It's going to be in June. So the next time we see them again, they would have had a decision on SA. And also just the machinations of what is happening elsewhere. Also around the electricity price tariffs that are going in, how that is now factored into the inflation calculation, which actually has proved to be a very good model they're running at the SARB.
Okay, well, we're about to cross over now to Pretoria.